Good evening, traders. Welcome to the Sunday Open. I'm your host, Craig Shapiro, macro strategist here at NinjaTrader Live. We got a great panel this evening to kick off options expiry week and a lot going on. Want to get a look at futures right when they open here, but we got PAX here, Pharm here, Sara's here. How's everybody doing this weekend?
Fantastic.
Great. Cold.
No snow here.
No snow down here in Southwest Florida, but here it is cold up there in Chicago. Here it is cold up here in Chicago. Here it is cold up here in Chicago.
Oh my God.
Well, let's get a look at the at futures here as we've opened. I think folks were expecting some fireworks, but doesn't look like we're getting anything as of, so to speak right now. Minis are up about 6 handles to 68.37. NASDAQ up 23. Russell's flat. Bonds a little bit stronger to kick off the week. Gold down $3 mixed. So a little bit quiet after some fireworks to end last week. We had the Fed meeting. We had some Oracle news. We had Broadcom news. We had a lot of volume. We had a lot going on. The Fed obviously cut interest rates on Wednesday afternoon, very much expected. The talk of a hawkish cut was out there, which was delivered, except then the Fed decided it was going to basically restart buying T-bills again in the amount of $40 billion a month, which was unexpected and more dovish as they're trying to add reserves back to the system. So that helped some of the risk-on sentiment. Bitcoin had rallied at the onset. That's been struggling. We can talk about that later. Gold been pretty strong on back of it, and equities originally bounced hard, and then I think the combination of the Oracle weakness on Wednesday afternoon and then the Broadcom weakness on Thursday really put some a damper on the bullish sentiment on the Nasdaq. So one will get to all that. Let's kick off the week, Sara. Let's talk about your views here on minis, on Nasdaq, and on the equity indices. Let's kick it over to your charts and start there.
All right, let's do it. Is my chart up? I can't tell.
Yeah, you're good.
Okay. All right, so with ES last week, we took the month to the upside, but we failed it. So if we go to the monthly chart, I'll make it big. So we traded above last month's highs, but again, failed. So I was saying, I guess, last Sunday that's the level in the sand for us. So if we're going to be long, we have to be above last month's highs. If not, we can't be long. And then we got a big sell-off on Friday, back through this broadening formation, which was lovely. Well, if you knew about it, it kind of probably whipped a lot of people around. And right now, we are closer to going 2 down on the week, which means taking out last week's lows and potentially coming back through this range. So then this is going to become our new line in the sand for this week. If we're below 68.05, we want to be short biased. And if we trigger it and then start coming back through it and we start trading above 68.05, then we would be bullish. So we always have these lines in the sand because we're either going to stay down and continue selling off, or the bears are going to try and take it down and then the bulls are going to come in and take it back up, and then we could get a potential outside week, which means we take out the lows of the previous week and the highs. So we could re-trigger the month. So it all just kind of depends on that level. 68.05 for ES. NQ, a little different. NQ is more stuck internally. It did not trigger above last month's highs, so it's basically still in a tightening range. This is basically a tightening range as well. So we're trading between 1027's high and 1117's low, and we're just kind of trading inside of that right now with ES and NQ. And then similar to ES, NQ is a lot closer to taking the week 2 down. Again, that just means taking out the previous week's lows. So same with ES, that's your line in the sand for this week, 25,118. If we're below it, we want to be short biased. If we're above it, we're gonna want to be long. And that's what I got for just those two. Is that all you wanted right now, Craig?
Yeah, I think we have a big week this week, expiry week. Got the VIX expiry on Wednesday morning, and we have regular expiry on Friday morning. I know it's also contract roll week for futures. I'm sure Pax will talk a little bit about that. And then on the data front, a ton of data this week. We get the NFP payrolls on Tuesday morning. We haven't had a payrolls release in quite some time. We'll have a CPI release on Thursday morning. Haven't had a CPI release or really any inflation data for even longer than we haven't had the payroll data. And we also have a Bank of Japan meeting on Thursday night, our time, and Friday morning Japan time. So that'll be very important for trading on Friday. Highly expected to see a BOJ rate hike on Friday. So a lot going on this week. Pharm, I know you were talking over the weekend about some A+ setups in your notes. How are you seeing the indices? How are you seeing the charts shape up for this week?
Yeah, I've got a different look than usual here. If we get my charts up, I've done something a little different here. So what I've got here on the left in the gray, this profile is the contract to date profile. It's obviously almost over. And then I've got a leg up profile from this recent swing low up to the high. And I'll show it to you on ES and NQ because there is a little bit of conflict between ES and NQ, which has made things a little bit difficult at times, right? The Dow, non-tech names in general have been strong while tech has struggled under the weight of my boot. And you can see relative to the meat of this, this profile on the right, this blue one, relative to the meat of all this volume, NQ is well below really the meat of that volume. If I click over at ES, you'll see it's a little bit different picture here, right? Again, contract to date profile, and then a leg up profile. Same thing, heavy volume up here. Poor structure coming off the lows, which we talked about a couple of weeks ago. Doesn't have to be bearish, right? But if this volume is lost and offered, you could see something like what we've seen in NQ. And what I think would happen is that NQ would probably aggressively accelerate to the downside. And it does put in some targets that might surprise you. But again, with thin structure here, coming back into range, that's what the risk is. So to me, I think a lot of this is going to be about ES. Does it break this range? Sara already kind of mentioned it, right? I mean, if we come in here and we take out, the lows of the past 2 weeks, which are relatively equal, I've got that spot 67.91 to 96 that I've been talking about for a couple of weeks. I wanted to see it 2 weeks ago, then last week didn't see it. Like maybe that kind of stick saves things and it comes back in range, because absolutely, I completely agree. If we get a failed push, ideally not on a Sunday night, but if we get a failed push, especially during cash hours, through these lows that can't successfully break away from this volume, then it can rotate back up to the upside. And I think that would be something that could potentially slow down NQ. But I mean, to me, NQ is just kind of peering off the edge of a cliff here, waiting to go to its home at zero and possibly negative infinity. And it's really just ES that's kind of holding things together. So to me, like, I rarely take breakdown shorts. I will short the piss out of this thing if it breaks down, back tests last 2 weeks lows, and I will just hold on to that shit for a while because it looks bad. This could come all the way down a lot more quickly than you would want to believe, especially if ES goes with it. So that's the risk. Now, on the flip side, I will say, I'm going to go to my weekly profiles and point something out. Something that needs to be a little bit cautionary to bears, potentially, because I'm always looking at both sides. I'm not a fan of getting trapped and getting squeezed. And so I'm looking at both sides. That's my lean, especially for NQ, is that this thing pukes to hell. But the one thing that has me just a little bit cautious or giving me some pause, and why I'm going to be a little annoyed if this takes out the lows here as we're talking. It's probably going to piss me off. But look at the lack of a volume build on the way down, mostly due to time, right? So this past week, most of the consolidation was way up here, right? In the last 2 weeks, way up here, above 25 fives, let's say, right? And then we got the breakdown on Friday, right? So as of recently, this is the generally agreed upon value. And same thing with ES. So and especially if ES gets that failed break, then it's just going to revert back up to probably the highs of its range. And absent any kind of volume build here, it renders NQ susceptible to reversion back higher. Now, I'll tell you, my best case scenario, honestly, would be because I'm a trader, right? I'm not a bull or bear, I'm a trader. What I would kind of like to see is a continuation of this thin structure back to the downside. Just puke them out, right? Everybody that loaded up for Santa way too early, not realizing that Santa comes the last few days of December and the first couple of days of January. Puke this out with an aggressive move, very little volume build on the way down. And then if and when it finds its feet, which it would, maybe I've got light support at 0, a little bit more firm support at -40. But once it does find its feet, if that's the path it takes, thin structure up, thin structure down, then you could potentially get a spicy reversion trade back up to this volume to see what's up. And so like that to me could be like a nice Santa rally situation where we just rinse out, because keep in mind, liquidations of longs actually strengthen the market. Like it sounds like a bearish thing. Like if I want to get long, I want to see them puke. It's a bullish thing. So it rinses out any of the weak longs. Because look at this. It just ripped up higher on that low volume week of the holiday. And then everybody was like, oh, got to get it in for Santa. And right now they're like, okay, well, I'm an idiot. And it's racing down. So if they get rinsed, then it opens up the opportunity for new, stronger bulls to step in and bid this up properly. So that's kind of the big picture for me this week. If ES and NQ both break down below the lows of the last couple of weeks with continuation, then it's gonna vomit. It's gonna be like The Exorcist. It'll be glorious, and then it'll find its feet, right? And then maybe you can take it back the other way. If there's continued conflict though between ES and NQ, then it just it's a little bit harder. But I would still be leaning short NQ until it really finds its feet and finds an aggressive bid.
Yeah. One of the things we definitely saw last week was rotation, right? We saw rotation out of big cap tech. We saw NASDAQ certainly leading to the downside. Minis were relatively better. IWMs made new highs and the Dow made new highs too, right? So you definitely saw that inner sector rotation into some of the smaller caps, into some of the industrials, into some of the anything really away from tech, as we had, really idiosyncratic negative news from Oracle on their numbers Wednesday after the close. And then the story that came out on, I think it was Friday morning, where they were talking about potentially delaying some of the CapEx spend with OpenAI by a year. So throwing some caution to the growth story there. And then the Broadcom was also similarly idiosyncratic, really big beat and raise there by Broadcom. Stock was up a ton after hours on Thursday, completely reversed it, and then some on Friday. So you had this, pretty big idiosyncratic moves out of tech, and the rest of the, sectors away from tech kind of held in okay, as the talk of the Fed, not QE coming back, I think supported kind of risk sentiment broadly. But then into Friday afternoon, it was a little bit more of the, oh shit, what have we gotten ourselves into here? So we'll see. I think big level this week to keep in mind is there's a big, we've talked about this before, the covered call ETF for the NASDAQ, the QYLD, rolls their monthly contracts on Thursday afternoon. They cover their existing and then they re-put out a new one on Friday morning. The level there is 23,950 cash NDX. So keep in mind that was a big, not that level, but last month's level, I forget exactly what it was a big level. We saw a ton of gamma back and forth at that level kind of throughout the week of the roll. So keep that level in mind. But certainly this week with options, there'll be a ton of volume with the roll. So Pax, I'm curious, how are you thinking about the setup for this week? How does the roll impact decision making for you? And then lastly, I know you talk a lot about the quarterly pivots. I'm just curious, now that we're rolling into a new quarterly contract, do the quarterly pivots change this week, or do they change in January?
They change next week.
Next week.
Quarterly pivots change next week. And this is my Friday, and especially tomorrow is going to be my least favorite day to trade. What contract do we trade? Do we trade March? I think everybody's front ends have probably rolled to March. But DEES is still heavier in the volume. So, what pick your poison. Are we going to trade DEES at, are we going to trade March at 68.83? Or are we going to trade DEES at 68.23? That NASDAQ's got a 250 handle gap between the DEES and the March, and the S&P's got an almost 60 handle gap. So, these things are not thrilling to me. I talked about on my Friday show, I talked about rollover. You know, volatility will come out of nowhere, and it'll stop on a dime, and it could reverse, and it could do all kinds of crazy things. Traditionally and historically in my life, Anthony and I have talked about this a million times on Twitter and, you know, in spaces and things, or, you know, just on podcasts, is that, you know, we have taken rollover off. The 2 weeks of rollover, I've gone to Arizona, or I'd go to Wisconsin. I just wouldn't trade. But as you know, as we got into the tightening cycle, the gap between the front month and both the S&P and the NASDAQ started to widen from just a couple of ticks to 5, 10, 15 points a quarter. And now we're at 60 points. We're at 250 points. For the majority of my life, it's been just a couple of ticks or a point, the spread between Dec and March. So, you know, with that spread, with the spread being wider, then rollover also happens later. You know, we would roll on Thursday or Friday. Now we're rolling on Monday or Tuesday. So I'll trade March as the front month when March has more volume. Right now, Dec is leading by, my eyes are bad, but by like 1,000 contracts in the S&P. NASDAQ, though, NASDAQ's got a couple of thousand heavier in Dec. So for now, I'm looking at the the Dec contracts. So that's another reason why I don't like trading this period of roll. I am looking forward to the new contract, though. You know, I have been talking and Coldwater in the Coldwater trades had pointed it out. We've been talking about 69.83 being the upside target all quarter long since September. And we were talking before the show in the green room, if we have a green room, you know, before we started our show, is that March traded there last week. March traded 69.80. It wasn't the front month, but we got there. It's just not fair, you know. I mean, it's like winning the lottery after you well, maybe not. It's a bad analogy, but like my ex-wife losing a ton of weight after we got divorced, something stupid like that. I mean, you know, it wasn't the tradable month. It's not going to, you know, it wasn't for us to take advantage of, and you know, I'm not going to sell a illiquid market at that point. But man, I mean, we got there. So now what do we do? I mean, do we hold these levels and kind of creep back up? I don't think so. Craig and I, Craig, we've been talking about this on Sunday night. You and I talked about this when we were together in Florida in October. I'm bearish next year. You know, I mean, now that's a guess. It's my opinion. You know, I think the market is setting up for a real prolonged break. However, if we open up in January, we start to rally, I'll allow my process and I'll allow my trading strategy to get me long. And if the market sustains the you know, bids and we continue to roll along, I'll get long. I don't want to sound like I'm equivocating, but I mean, I'll trade my process and not my opinion. But my opinion is that that we're setting up for a major break to the downside.
Yeah.
Yeah. I don't know. Is it going to be today? It's more about the next couple of days, more about rolling open interest than it is about price discovery. And volume will continue to be very heavy tomorrow, which again has more to do with rolling open interest than it does price discovery, as it is every roll.
And you've talked about these quarterly pivot targets or levels, and those will be new come Monday. How do those get determined? We've an advanced look at those, or it just depends on how we close on Friday.
Depends on how we close on Friday, and then it's a bunch of math that you know we'll talk about next week.
Yeah, Sarah, I just want to flip back to you real quick. Have you anything in the underlying? And this is, you know, Deli's curious. I think this is a great question, but any thoughts on any of the big names within the NASDAQ, whether it's NVIDIA or Apple or Broadcom, anything you're seeing in any of the individual charts there that are supportive or anti kind of the what seems to be the brewing narrative here of weakness in the NASDAQ? Are we seeing that in the underlying Mag 7 names? You know, let's say maybe more so than some of the other names that you have on the screen there. Sorry to throw the curveball there, but thought it was a good one.
It is a little bit of a curveball. Like Apple is set up for a bullish week next week as far as the charts go. NVIDIA bearish. What are, let's see. Apple. Basically a hammer week for next week. However, you got to be careful with bullish setups if the market is not bullish, because, you know, you like to have the market help you in your, you know, stock selection. You don't want to be fighting the market. Nvidia looks good for downside. This is a weekly chart. So we had a big kind of failed upside week last week. They almost went outside week, but we ran out of time. So next week, we'd be looking to short NVIDIA below last week's lows at 174.62, targeting this level and this level. So like 170 and 164. And that would kind of finish our broadening formation off if you kind of drew it with your eyes. You've got a high, a low, a new high, and we're coming back through that range. So we would be looking to make a new low. So take out this 164, because that's where other people's stops are. So the first people's stops were here, and then the next people's stops are here. So we look to take them out. Google had a bearish week last week. It was pretty basic strat stuff, and inside week and down that hit its target. So closer to continuing down for Google.
What about and what about the Russell? I don't think we talked enough about the Russell yet. I mean, clearly we have this alpha unwind going on, right? NASDAQ has been the leader all year. AI has been the story all year. Russell has lagged from relative perspective for, you know, for the most part. And then, you know, look, over the course of the last few weeks and such, we've been seeing, you know, more and more of the tech story start to stall out as we're changing the narrative on the AI CapEx, going from a free cash flow story to a debt finance story, some concerns about returns, some numbers that are scaring people. And so money is rotating into small caps and into other areas. But, you know, from my perspective, you know, what is really the story for small caps if we have, you know, interest rates in the long end, which continue to move higher, even though the Fed is cutting? It's not like cost of capital really is moving lower. You know, thematically, which parts of the economy really can pick up the mantle if the AI story unravels? So yes, from a positioning and tactical point of view, we've seen that rotation to Russell. I'm not so sure that it lasts. I think we're more likely to see more of a beta, highly correlated move, you know, certainly to, you know, for next year. I'm curious, you know, how does the Russell chart really look to you?
Well, we're at all-time highs, so it looks to me bearish. I know people probably think that's insane, but I don't want to play it long. I want to play it back down. And again, the strat and our broadening formations, like this is what we look to do. So we're looking to come back down through this range. And I hope you're right, Pax. I hope we have a bearish 2026, because that'll give us some nice volatility and nice trades and ranges and a higher VIX, and, you know, trading up here to me sucks. Like I hate when we're just like so close to the all-time high and the VIX is low. It's just really boring. So last week RTY, so RTY and YM have been strongest now. They both hit new all-time highs last week, which I think you mentioned earlier. And so yeah, I'd like to see them come back through this range. And if we got ES is bearish and Q is bearish, then there's no reason that this shouldn't go with it, you know? So we'd like to see it back down there. And maybe, you know, we're not probably going to get there before the end of the year. And honestly, guys, this coming week, this is the last full trading week of the year. Then we got Christmas week and New Year's week. So, and I know Pac said he doesn't really trade around roll time, and a lot of people just don't trade around holiday time. So if the charts aren't setting up for you, don't feel obligated to trade. I know me and my partner, we take off the last 2 weeks of the year every year. So we're not going to be trading. You know, we're going to be doing the holiday thing. We'll still be around, of course, and we'll be here, but we're not going to be like actively trading in our Discord and all that stuff, because it's obviously slower holiday trading too. So
Yeah, look, I mean, it's expiry week this week. The varsity team is going to be engaged, for the week. But come next week, and in the last couple of weeks of the year, a challenge from a liquidity point of view. We'll probably have, your regular vol sellers in there. I would point out my old boss Steve Cohen used to say he loved trading the last week of the year because no one was
Me
around.
too. Oh, I
And so
love it.
that was his favorite week to trade because he was able to set himself up, incredibly well for
Me
the early
too.
part of January. So just keep that in mind for the following week of the year for swing trading. And if we see some of the breakdown, but we don't really see the volume or the volatility, that those last couple of days of December and setting up for the early part of January could be very interesting for swing trades. So
Oh, I love the last couple of weeks of the year. If we're it's like the day after Thanksgiving. It's always one of my favorite days to trade. Nobody's around, and if there is movement in the markets, it's pretty directional. 2018, in the fourth quarter, we went from 2020. The S&P went from 2944 to 2346. And we made that low on Christmas Eve. That was a life-changing event for me. I mean, that whole move was life-changing. That was the best Christmas. That was the best Christmas of my life.
There are some similarities. Powell delivered a hawkish message at that Fed meeting
100%.
too, and he did say at that meeting QE was like, or QT was gonna be like watching paint dry. So people were concerned about that. This time they're actually going to be adding liquidity. I think he was trying to remember that he doesn't want to ruin Christmas, but they may ruin it anyway. We'll see. I mean, who knows? This liquidity that they're adding, the buying of T-bills, is not QE, but it on the margin is adding liquidity and is putting reserves back into the system, which should alleviate some of the funding strain over year end, over quarter end, and over month end. It's not, the Fed. Look, the Fed reduced the size of its balance sheet by close to $3 trillion over the course of the last few years. They're going to add back a pace of $40 billion a month in special reserve management operations here. So they're going to, for the next 4 months, it's $160 billion plus, 15 billion a month in rolling mortgages to T-bills. So that's another 60. You're still talking about adding back, call it 200 billion after reducing 3 trillion. It's not the same thing, but on the margin, they are sensitive to making sure that financial markets continue to operate and financial stability is still top of mind. But that doesn't mean that other factors can't come into play. So I do want to shift gears a little bit to the bond market real quick. I know there's some questions about the bonds, and then we'll talk about gold, which just look here. Gold has rallied back. It's up 7 to 43.35. Bonds are a little bit stronger this morning. Maybe if we could throw up Pharm's chart there on the long end, but I'm curious kind of how anybody's looking at the bonds here. Clearly last week, after we had seen bond weakness stemming from Japan, stemming from Germany, higher long end yields, more stimulus, more deficit spending, which had kept pressure on our bonds. Fed comes in, gives this surprise, adding back liquidity, curve steepens, front end yields move lower, back end yields are moving higher. And really threatening to really start to break out higher in yields, break down in UBs. Curious, how do the charts really setting up here for you guys?
Oh, the bonds I think are incredibly important, and they're very important in my trading. So, who wants to own duration? I mean, who wants to own paper 10 years or even 30 years out? We are at I think we were at 126. The 30-year was at 126 when we started this when the Fed started cutting. And I mean 126 when they started cutting. We're at 120 in October. And now we're at 114.27. So right now we're at the 30-year bond is at some pretty big support. And if we don't hold here, then we're going to be down near that double bottom that we set in September. And I think that was that was as we were heading into roll. So last September at 113.01, we take that out, we're going to be at we'll be at the low of the year pretty quickly too. And so here, these levels, you guys pay attention to them, was 113.01. If the 30-year bond breaks those, then we're back down to 111.11, happy 11.11. And then underneath there, we're at the low of the year at 110. We're at levels that we were trading in the late 90s, early 2000s, and that's I don't know what kind of correlation we can draw to that, except for the fact that asset prices have continued to inflate, and I think that with the price of gold where we are, with the price of silver where we are, I think that is the bonds and the metals and the dollar are signaling a market that is under tremendous pressure. So I don't know. I mean, underneath 114.20, 22, it's 113.01. Underneath 113.01, it's 111.11. Underneath 111.11, it is down to 110-ish. Underneath there, we're in deep trouble.
Yeah.
I own a
It's
bunch
hard
of
to
bills.
imagine
Go ahead, Pharm.
it's hard to imagine the Russell continuing to do what it's
Right.
doing if yields really break out. And I mean, Craig asked about individual charts versus equities, and I don't know if he thought I was going to pass on the opportunity to bash the Russell or something silly like that. But I mean, like the IWM chart looks like my wife in a bikini, but many of the individual name charts within it look like me in a Speedo. So like, I don't know. There's not a whole lot of broad-based love within the Russell. There's just some names that are doing well, and some that just look like horrifyingly bad, like me in a Speedo. So, we'll see. I agree that as long as it remains strong, I mean, you can't touch it. But if it does fail these news highs, which it absolutely loves to do because it's such a turd, just come up and make a new high and then shit the bed, then it could be a fun trade back down to the downside. But it's had a huge extension for me, coming back from like 2018 or whatever. So it's a big spot here, and obviously failing a new high can look kind of bad. But for now, it looks good. We've continued to see the rotation to the Dow, to the Russell for whatever the hell reason. Yeah, I mean, it's been a shift away from the risk of AI. And I don't really think that should surprise anybody into the end of the year. You've got a choice. You can sell, you can reallocate. And I think we're seeing a little bit of rebalancing just to get away from some of the potential risk in some of these AI names into next year, to buy a little bit of time. Because, yeah, many of those MAGS charts look just horrible. So those are kind of my thoughts on the Russell.
Yeah. Within the Russell, I mean, some of the biggest market caps now within Russell are, crypto related, they're nuclear, small modular reactor related, Bloom Energy, some of these names that are tied into the AI story have gone up the leaderboard on IWMs. A ton of those charts look, they look like death. And so I don't know. I think what we've seen here, the phrase I like to use is we've seen an alpha unwind so far. People have been long NASDAQ, short IWM, so that now your alpha is being unwound,
Right.
and that typically begets a beta face plant. And I think that's where we're gonna be headed. We're gonna have a much more highly correlated move in indices, probably come the beginning of the year, and whether or not that move is to the downside or the upside typically will depend on liquidity. Is liquidity coming in? Is liquidity moving out? And so yes, we are getting marginal liquidity from the Fed with this T-bill buying, but I think we are also going to start seeing volatility moving higher, which is a drain on liquidity. Treasury's not really adding, more liquidity here. The issuance calendar is going to be more robust for next year. And the other thing on liquidity is this AI CapEx liquidity drain, right? We're seeing IG issuance has been massive in December, and it's going to be massive again to come in January as the data center build out moves into a debt finance story. And so we're going to see term premiums moving higher, right? And that's the big story for the bonds, is we're seeing this rise in term premiums, which is the additional compensation, investors want for holding longer duration bonds. And so those term premiums have been moving higher, which has been pressuring the long end. And you're, combining that with Japan and Germany and
Yes.
France.
Can't forget that.
Globally, we're seeing a big call on capital for 2026, and that's just going to pressure all valuations, all asset class valuations. I think that you're starting to see a little bit of that in the bond market in December here as people are positioning for next year. So,
oh yeah, we cannot forget that. That is huge.
A real quick look at the tape. Still pretty quiet. Minis are 68.28. They were a little bit lower. They kind of bounced back. NASDAQ down 46 handles to 25,170. Russell down 1.5 points. Gold. Let's flip to gold. Gold up 9. Up another 20 basis points. Gold was the real kind of debasement story winner in my view last week, with the Fed adding this liquidity Maybe Sarah, let's start with your chart on gold. How are you thinking about gold? We're talking about silver as well, which also broke out to, further all-time highs last week, had a nasty reversal on Friday. But let's start with gold. How are the charts looking there?
Gold's still chugging along from that reversal week back here and up. So it's still trying to reach for all-time highs as far as we can tell. Let's look at the daily. Yep. I mean, still good. Nothing to worry about. If you're long, you're good. Or if you've been long, you're still good. There's no reason to, panic or get out. There's no signs of a reversal yet. The only sign of a reversal to start would be if we took out Friday's lows. But so far we're opening, we're green. We've got basically a double top up here now. So they're going to want to take that out. And then after that, once we hit all-time highs, I don't know. We do not use like Fibonacci, what do you call them? Extensions in the strat. We just say like still good. So as long as we keep making higher lows on the daily, we would say you could stay in. And then silver, yeah, silver expanded that broadening formation we were talking about last week, and then had some profit taking on Friday, but again, nowhere near reversing the week. And you've seen ever since this week, that was the reversal that we mentioned, and then up, up, up. So still higher lows. So you're still good there as well. Nothing to worry about. If you want to be really tight, you would put your stop at Friday's low. Same with silver, or same with gold. But yeah, that's it. So gold and silver still trying to make new all-time highs.
Yeah, gold. I mean, silver has so massively outperformed gold.
It's been amazing.
This year. It's been pretty epic. I was looking. I mentioned this on I think on Thursday morning, but the gold to oil ratio, gold to silver ratio is basically making like a 15-year low. I think. I haven't seen these levels since I think 2011.
Oh, really?
So X some time in 21, but it's been a pretty massive move for that ratio. And so I don't know, from here, it's, if you believe the economy is fine and the AI story is intact, I think silver continue to outperform. If you're more concerned about that, I think we can start seeing that go the other way, but it did look like some exhaustion maybe last week on silver. Pharm, what are you thinking on gold and silver here?
Yeah, I mean, I generally agree. They look constructive until they don't, right? For gold, I would mark a couple of spots for this week. 4273.4 to 4278.9 as a range. And then I would mark 4354 to 4363.4. Basically, you had on Friday, you get an opening drive higher that gets rejected into B period single breaks. If I were to write a textbook on what a top looks like, and just bear with me here, this is what it is. I would look at a failed opening drive higher with nice excess on the 30, and then single prints down through B period. I'm not calling a top on gold. I haven't even looked at it other than these last 3 minutes. But this is what it looks like. And so basically, if you're going to reach into these singles and they are not found to be resistance, then just stay long and clean up those highs maybe. If we then give back, I'm backing up to these single prints from whatever that day was, Thursday, I guess. Here you can see this 30-minute period traded. It's the only period through which these prices traded. That was the 273.4 to 278.9. That is basically protecting this volume here. Very strong break, and I like the consolidation, the volume here, and then the break higher. You just don't want to start to see some of this given back, right? So as long as we continue to build out volume, again, really like Friday's low in this case is a really good risk management tool, I think. And then if it is lost, I would look for these singles that I mentioned, the 273, 278 range. And if it does trade into the upside and you're long, just be a little bit cautious if it gets like a firm, stiff rejection. But like basically everything has, it seems like, has those B period singles from Friday, that same look, nasty 10 a.m. Candle across a lot of assets. And so look for some of the other assets that test it first, right? And see how they respond. And sometimes it can be a clue, right? Because NQ's got it, ES has it, gold has it. I'm sure, the Dow and the Russell have it, same type of thing. And sometimes that can be a clue, but it's constructive until it's not. And I believe, from a macro perspective, gold's a good place to have some money, not necessarily initiating here, but I would be holding on for much lower, and certainly physical gold. So those are a couple of spots I would look at this week.
Yeah. Pax, have you been trading gold and silver at all?
Silver, not gold. I have not traded gold since I flattened up longs in front of 44 when we were in Florida. Silver has been a phenomenal trade from the quarterly pivot all the way up. So it's silver is trading in $3.20 increments from the quarterly pivot of $50.93. So $50.93, you swing it up in $3.20 increments, and that brings us up to 60. Oh, no, I got to look. That swings us up to $60.34. So if we make it back down to 60.34, and I'll try to get long. Above that takes us up to 63.54. So that'll be the target. 63.54 will be the target on the upside. Above 63.34, that takes us up to like 66.70. That seems like a long way to go, but I'll tell you what, when they settled out at $50.30, whatever that was, 50.90, who knew that we'd be trading at $60.34 and at 63, that's just crazy. So silver is a runaway freight train. Nobody, if you're trading it from a shorter term basis, be very careful when picking tops in it. You can get run over trying to pick a top in silver. Gold, Pharm's analysis in gold, I think, was spot on, anywhere between 42.80, or 42.70 in this 42.78 range, all the way up to 43.54 is just it's a kill zone. I don't want to trade it at all. Once we start trading above 44 even, then I'll start looking at trading it from an intraday standpoint and a bit of a shorter term swing. Swings for me have nothing to do with time. Swings have everything to do with price. So once we close above, if we close above 4,400, then we've got a lot more upside, and I'll expect that there'll be a lot more buying to come in here and propel us higher. And I think that the craziness that we're seeing in the world, I think is only positive for the metals in the long run. But from a trading standpoint, I don't want anything to do with it. I'm looking for rollover I'm looking for everything to roll tomorrow, and then I'll be looking to trade the March contracts. I'm still looking at these. Somebody had asked earlier they came in late and I just got done talking about it, but I'm still looking at December until March is heavier, but that will be tomorrow during the trading day. So I don't anticipate trading the indices at all. I will keep an eye on silver. I am long gold in my retirement accounts. I'm long gold from an investment standpoint, but I'm not trading gold here, not up here.
Yeah. Yeah, look, the gold story, we've been talking about it for months, hasn't really changed much. But I think the news from last week of the Fed looking to restart balance sheet growth is, even if it's at a small pace, nothing more permanent than a temporary government program, right? I mean, that's a Milton Friedman comment. I mean, once they start to build back the size of the balance sheet again, it's gonna be hard for them to slow it down, particularly as you get a new Fed chair next year. And so the odds of a Fed chair either being Hassett or now Kevin Warsh are close to 95%, either one of the two of them. But the odds of Hassett have moved down over the course of the last few days, and the odds of Warsh have moved up. But the truth is, they're both going to be Trump guys, right? So I don't really think there's much of a difference about who gets put in there. I do think they floated the Hassett idea. It seemed like there was a fair bit of pushback from the bond market, from the Jamie Dimons of the world, from fixed income investors who are a little bit maybe concerned about Hassett's ability to wrangle the cats at the board, because he's never been at the board. He's never worked at the Fed. I mean, he worked at the Fed, I think, decades ago, but never as a governor, never as a voter. And so there's some concern that he would just really come in and just kind of be, a Trump guy and nothing else. Whereas Warsh is seen as a little bit more of a steady hand. He was at the Fed. He had been more hawkish. He had been more of a hawk on the balance sheet historically. So if he came in, I think he would have maybe a little bit more credibility with the bond market, but he'd still be a Trump guy. So,
Craig, can I ask you a question?
Yeah.
So if Trump gets his wish and they really start hammering rates, is that enough to save the market? I think that they're so nervous about some shit that is not out there yet that he's trying to talk rates down as much as he can and trying to do something unprecedented in putting his people up there to get what he wants. I don't think it's enough. I think that we're so top heavy up here. They can cut rates down. Look, real rates are already at zero anyway, or just above it on the short term. So what's the difference here? What? I don't know.
Yeah, look, I think Trump is dealing with, I don't really want to get too much into his head, but, he believes we have the greatest economy ever of all time. And yet, his polling data continues to go south. And so I think he's trying to figure out, how to rectify that situation and bring back or keep control of the House and Senate next year, in the midterms. And so he's trying to figure out what to do and how to do it. And he doesn't understand why the stock market at the highs and $18 trillion of new investments that are, in theory coming into this country over the next couple of years. Why is that not leading to, better polling? And it's the affordability issue and it's the inflation issue. Right. And so I think he believes that if he can just bring, America's doing great, just take rates down to 1%. There's no issue. There's no inflation. He has solved inflation. And look, he's a lot of things, but he's not bigger than the bond market, right? And so the bond market is reacting already to his rhetoric about trying to force the Fed to cut rates, to remove independence. And so I don't know. Now, if we had a situation where markets were reeling and we saw, big job losses in the next couple of months, it would add more fuel to the idea that more rate cuts would be necessary, right? And so I think we'll have to wait and see on that front. But I think his ability to push the new Fed chair to get rates to, let's say, below 1%, which is where he thinks they should be, I think is virtually zero. I mean, the Fed chair still needs to get the votes from the other governors and the other voters. And so it's going to be very difficult to do that, particularly with the current composition of the Fed. So I don't see that. And look, Powell is in for another, through April. So another 3 meetings. There's going to be some pushback to that, unless the data really materially rolls over between now and then. So, it's wild. And last week was a little bit of was unexpected because there were some people who were thinking that QE, this not QE could start again next year, but the Fed did kind of push a little bit more aggressively earlier. So they, and I think that's why gold reacted. The other asset class, which I thought likely would have reacted to that would be Bitcoin and would it be crypto. Maybe we could throw up a Bitcoin chart here, but last functioning fire alarm, Bitcoin has not reacted as if there is a lot of liquidity coming from the Fed. And it is acting, for lack of a better word, like crap. And so I don't know, maybe Sara, let's look up your Bitcoin chart here, but I mean, it looks pretty bad. And so I think that's throwing some caution to this idea that liquidity is running big enough to really move all asset prices higher.
I hate words like it looks bad. It depends which way you're trading it. So yeah, for crypto, I mean, it's still like we had this big bullish news. What was it? Like somebody made like crypto ETFs or whatever, which they acted like it was a new thing. We've been able to like trade crypto ETFs for a while now, so I don't know exactly what the news was or why it was so bullish, but that was what that run was. But the higher time frame target, I still down here for this year. Like we get into next year, if we haven't hit this level, this 74, it's a funny level, 74, 420, 69 level. We could go a lot lower.
Pharm almost spit out his coffee there with that. That can't be the level.
It is.
It is. No, it is.
Some whale. I don't know. I was like, I don't know what whale did this, but I love them. That's the level. It's from. See, I even made a big deal about it because I have the humor of a 12-year-old boy. From 647. That's the level. So that's where we're trying to go. It's just, you know, taking its time. But right now we're coming here again with me and my Browning formations. We made a slight higher high back here on Tuesday and we failed. So we're coming back through. So we're trying to take out last week's lows and then hopefully, well, you can see what I want. I want it to make new lows, expand the Browning formation, maybe get a little corrective activity right here after we make new local lows. So get a little corrective activity and then continue selling off down to that 74, 420, 69 level.
One of the things that Pharm, I think you've said before is you like to hear how, or like to watch how things react to the news, and when the asset price kind of acts opposite of what you would have expected, that really can provide some interesting information. I'd say in the spirit of that, I would have thought Bitcoin would have acted a lot better after the Fed, decides to basically restart bills buying, expanding the balance sheet. And the story for Bitcoin is printing money. The story for Bitcoin is a narrative about the Fed expanding its balance sheet because it has to, and that government deficits are, never going away. And so the Fed is basically financing that. We saw a little bit of a pop on Wednesday afternoon with the news, and then completely faded and continues to sell off. And according to Sara, looks good, but I'm teasing, but looks bearish, right? And so I'm curious,
yes,
how better than bad, but how are you thinking about it here?
Yeah, I mean, it's definitely true that I'm looking for things like that, right? I mean, how should an asset class respond to this news versus how does it respond? And I'm going to say two things. The first is that, I mean, it's kind of been doing, and I will not pull up a Bitcoin chart because it exploded my chart last time. So apologies for having NASDAQ up here. Same thing. But it has been sort of giving that signal, right? I mean, we've been talking, we've seen a lot of people say for months, I mean, how this deluge of liquidity was coming, and it's clearly Bitcoin didn't get the news on that. Also did not respond particularly favorable to the bills, which was, more than I would have expected. That said, the flip side, and I'm so old, I don't remember. Pax would remember something like this perfectly, but like maybe 2019, I don't recall, but 2019 or so maybe, and maybe you recall last time the Fed sort of reversed course and started buying assets. I don't think it was long end. It just kind of foggy because I'm an old man here. I believe Bitcoin made one more new low after that. Like it just acted like crap. Made one new low, maybe another new low, and then it went on a moon mission after that. So I'm a little bit cautious that maybe we do something here, but I'm with Sara. I really think that low needs to be. It'd be nice if that low is taken, because again, longs are going to be better too once that low is taken. It's the same thing as Crude, and hopefully we'll get Sarah's Crude chart up today as well. But I would like for the meme price on Bitcoin to print, which is 69,420, spot 69, which just mark it on your chart and you'll be like, wow, okay, yeah, obvious support resistance, like the most important level on this chart. And I also think silver, the meme metal, needs to print the meme price of 69, spot 69. But those are my thoughts on Bitcoin. I think it looks great to me for a little longer, but you want to see, again, you want to see the capitulation puke. And I probably would look for a spot to get long, because to me, one of two things is happening next year. I believe the markets are going to take it out of the dollar, or they're going to take it out of the long end bond market. But something is getting slaughtered next year with the moves that Trump is making here. And so maybe if it's the dollar, maybe after some initial unwind from ex-US and US equities and things, I feel like a lot of that's been done in Bitcoin. Maybe it finds its feet first in a situation where the dollar is getting hammered. Bitcoin has already been hammered. And yeah, I think you could see equities dollar down next year, which everybody seems to think is impossible. I think we might see that. And I think Bitcoin might be the first to find its feet in that situation. So I'd like to see how that plays out, but it's going to be an interesting year for sure. But I do think either the dollar or the long end of the bond market's getting smoked next year.
Yeah.
Hey, I want to make a point. So I think we saw, I know I'm bearish, and I think that we sound next year, and I think we all are kind of, But next week I'll have next Sunday I'll have a whole new set of levels and numbers to look at, to pay attention to. And when we start the year with the yearly opening range, then we'll have we will have very, very clear pivots. Right now, we're coming into the end of the year, and the year is really, from a macro standpoint, is kind of over. From a trading standpoint, it's not. From a trading standpoint, there'll be some stuff for us to do in the indices, the bonds, the metals, Bitcoin. There'll be some stuff for us to do going into the end of the year. There'll be some trading. But from a macro zone, or from a macro level, we're really kind of over, right? So, we're just drifting up here at the high, a little bit off the high. And, do we tail off to those levels that Pharm and Sara, had brought our attention to earlier on in the conversation, and I think we do. But now, okay, if we open above the yearly opening range, we will rally, and I'll know where we're going to go, or have an idea as to what levels are going to be important and how we're going to get there next week. And that, so there is a case. You can make a macro case. Anybody can argue whatever side of the market that they want to. But the market is absolutely going to do whatever the hell the market is going to do. And we will trade it, right? We will be here to trade what is in front of us. I'm not going to start getting short because I think that we're in trouble next year. I'm going to trade my process, and I'm going to trade my levels, and I'm going to trade my macro zones and my flattened zones, and I'm going to trade the pivots and everything else that we talk about day in and day out. So, I don't want to give the impression that, that I trade my opinion, because I don't. I'm going to trade the market as it is, not as I think or want it to be.
Yep. 5 minutes to go here. Just last look at the board, and then we'll go to some final thoughts. But S&P's up 2 handles, 68.32. Nasy's down 18. Russell down 2. Bonds a little bit stronger, up 8-10 ticks at the long end there. Gold up $8 to $43.36, mostly flat. Bitcoin down 2.3% to 88,330 on futures. Let's close with crude. I know we didn't get a chance to talk about crude last week. Let's talk real quick on crude. For me, crude has been the one, really the one area that hasn't participated in the risk on rally in 2025. It's been an area that the administration has been very focused on, making sure that oil prices stay muted and gasoline comes down and inflationary pressures from energy stay on the back burner. But I don't know, for next year, big story for energy, potentially for natural gas with data center build out, and diesel with data center build out. And so we've seen a lot of barrels come off the market. I don't know. The chart continues to look bearish to me. Supply demand stuff doesn't really look great, but if we did get a move higher in energy to start the year, that would have very big implications for bonds and for equities. And so maybe let's close on crude. Any thoughts? What are the charts saying?
I'm still looking for that 55 level.
Me too.
From, I know PAX is too, from April of this year. Oh, that's the same date of Bitcoin's low, 4/7/25. Interesting. I don't know what that means. It's just interesting. But yeah, so I'm still looking for this low. We did just trigger the inside month and down. So last month, what was last month? November, my birthday month. November was an inside month. We went inside and down this month. We are not currently below that. So again, your line in the sand for crude to be short is below 57.10. And we're targeting, basically 2022 low, or golly, I can't believe I just said 2025 lows. So that 55 level, and then I do want to talk about the dollar really fast because it's going back through its broadening formation beautifully. I'm your broadening formation girl. So we called the short back here 2 weekends ago. The inside week, it's another actionable strat signal. Inside week at the top of a broadening formation or at highs, we look for reversals down. So we're looking to come back all the way through this range. So all the way back down here. So whatever that means to you, economic people, I don't know, but that's where I see the dollar going.
Somebody asked about natty gas. I don't trade natty gas anymore. It's the
Widowmaker.
the Widowmaker, man. I have I've had some great trades trading natural gas, and then all of a sudden it's just, well, bad pun, it evaporates. So, we're down here at the 50-day moving average. So keep an eye on that. Yeah, 41.12. Be careful trading natural gas. Bitcoin. I'm sorry, Sarah, go ahead.
No, I was gonna say it's the Widowmaker probably because it makes a ton of broadening formations.
It does. It's tough.
But yeah, that had a nasty week last week and back into this range. So I mean, they could puke it all the way back down to here. But there's so much easier stuff out there to trade. I don't know why people do
Good
that
point.
to themselves.
100% right. That's exactly right. That's the exact point right there.
Yeah.
All right. Well, we are at 7 o'clock. So it's been a great hour. Really enjoy spending it with you guys and with everyone in chat. Please like and subscribe to the channel. Looking to continue to grow out the user base and the subscriber base here. So again, great show, guys. Looking forward to a big week, active week. I think futures are quiet now, but a lot of news, expiry, NFP, CPI, BOJ, a lot of acronyms, a lot of volume. Everybody, good luck trading, and we will see you all tomorrow morning with Deli and Shai, myself, and Jim at 8 o'clock for the morning gap. And so
let's go.
Let's do it. All right. Have a good week,
see you
everyone.
guys
Have a
next
great week,
Sunday.
everybody. Have a great week. Trade them up.
Yeah.